Even Spotify has a great offer for fans of Korean dramas and OSTs. Upgrade to Spotify Premium and get 2 months of View Premium subscription, giving you access to unlimited Korean music, dramas, and variety shows on the go. Click on the banner to find out more. Upgrade to Spotify Premium today and get 2 months of View Premium subscription anytime, anywhere. Offer ends November 21st. Terms and conditions apply.
All right, guys. Can you guys all hear me? If you can, just simply type a yes. All right. Those in the room, you can type the yes, and then those who are on social media on Facebook, right, listening on our Facebook page itself. If you hear us, you can either type a yes or a like as well. All right, so that we know that all the audio is working. Okay, very good. Okay, so this webinar we have a special guest, all right? But I'll introduce you to him later on, all right? He'll be sharing his perspective into the US election as well. All right, so let me get started with this webinar, all right? So those who are late, you probably missed the front part, all right? But for those who are in the live room, all right, this whole webinar will be recorded and uploaded onto our website as well. Okay, so let me just do a quick introduction about ourselves as well as Alpha Play for those who are actually very new to us. All right, so today I'll be hosting you throughout this webinar. All right, so I'm Kayong. Most of you would probably know me as KY. All right, so what I'd like to just quickly share with you, of course, it's not my profile, all right, but if you want to connect with me, what you can do is add me on Facebook or follow me on YouTube. Basically, every week we do release 1 or 2 videos in terms of forex trading to teach you and share with you some of our perspective and insights into the market. All right, so a quick one, if you want to add me on Facebook, you can search me up. If you want to follow us on YouTube, all right, subscribe to our channel so that whenever we release a new video, you'll be actually notified onto it. All right, so a quick one about Alpha Play as well. Together with my partner, all right, today he is actually overseas, so he won't be with us today in this webinar. But basically, together with my partner JT, what we do is we set up this forex trading school with these philosophies in mind. All right, so the first one is actually to impart strategies to traders and those who are new, who wants to learn and how to trade the FX market itself. All right. The second thing is to build a cohesive community in the forex industry itself. All right. So basically, we believe that forex trading shouldn't be done alone. All right. The best part is it should be fun and enjoyable, and that's being done through a community itself. All right. And the third one we believe is that delivering our knowledge, sharing with you guys. All right, as well as having certain classes that are actually very comprehensive and reasonably priced, so that you won't be. Everyone will be able to afford those kind of financial education. All right. So if you want to find out more about Alpha Play, you can visit our website alphaplay.com.sg, and of course we do post certain things on our Facebook page as well. So for those who are on Facebook, all right, you can like our page so that you get notified whenever there's any update. All right. So the next one is I'm going to introduce you to the special guest today. All right. Basically, he's Steven. I've known him since my uni school days. All right, we are both from NUS Invest as well. So I wouldn't introduce too much into him. All right, later I'll get him online so that he actually can share with you personally about his own experience in the market. All right, he doesn't only trade the FX market, but he is also experienced in the stock market, and his style basically is more on the day trading. All right, so it's pretty experienced in the market. If I'm not mistaken, I still can remember. He has been trading for the past 8 years, all right? So it would be great to have him sharing with us some of his insight, right, into how the US election can also affect, all right, not only just the stock market, but also in the FX scene itself. All right, so I'll get Steven online after I walk you through the whole webinar flow for today itself. Okay, so today's topic will be really on the US presidential election. All right, and we'll be basically sharing with you some of our insights and to discuss some potential scenarios in the financial markets after the US election. All right, so for those who know us, we usually don't trade, all right, prior to such events. For example, like the Brexit, we don't really trade them simply because there's no way to really know the outcome of who's going to be elected or who's going to win this election, right? And if we actually trade prior to the news, right, in expectation that either Donald Trump will win or Hillary will win, it's more of a guessing work. All right. So what we do here is the keyword is after the election. All right. We are going to share with you, some of the scenarios that can happen in the financial market, from stocks, commodities to even the FX market. All right. So today's webinar flow will be we'll talk about introduce to you. All right, those who never follow the U.S. election. Introduce quickly to you what is some of the policies from Hillary as well as from Trump. All right, a very brief one so that you understand. If Hillary win, what are some of the possible fiscal policies as well as taxation policies that they are going to do. All right, so because that's going to affect the economy. All right, then the next part is where we're going to talk about how the policies is going to affect the U.S. economy. Right, and we'll talk about how the importance of the US dollar. All right, this one then will transit into the impact on the financial markets. All right, basically the FX, equities, and commodities. All right, so where I'm going to introduce Stephen in is let me walk you through the first part. All right, then I'll bring Stephen online to share with you guys his perspective on this particular election and some of the in-depth research that is done regarding the historical part of election as well. Right, so a quick one. Basically, this one we pulled off from Investopedia. All right, so it's actually something that we read. All right, and we kind of summarized for you guys. All right, so Hillary's policy, basically, if you follow my slides, right, her policies basically targets mainly the middle class. Right, and she actually has three kinds of policy, three pillars towards that policy itself. All right, so what Clinton wants or what she proposed, running her campaign was that she wanted to increase the income and she wants to focus on the middle class population in the US itself. All right, so what she has and her approach towards this policy was hinging on three pillars, basically the strong growth, fair growth, and long-term growth. All right, so what it means, right, is that in terms of strong growth, right, she basically pushed and proposed to invest in education infrastructure to promote small business growth. All right, and this is actually in line to increase the workforce participation. All right, and she actually, especially for the woman. All right, and her second pillar about fair growth, basically she encouraged profit sharing. This is between companies as well as the employees itself. Right, so that it can boost the minimum wages for these employees. All right, and in turn, right, ensure that the rich pay a fair share in terms of taxes, so that the money will flow towards the middle income class. Right, and hopefully through this, the spending, the minimum wages, the average wages in the US will increase, and hence the overall economy in the US itself. All right, so her long-term growth pillar is to encourage companies to plan for the long run instead of the short run, and she also plan to increase the regulation on Wall Street, right, and that would deter risky speculation that might happen, and eventually, long-term stabilizing the effects of the economy. All right, so you can see basically Hillary's policy is more hinges towards the middle class. All right, but if you look into Donald Trump's policy, all right, based on his tax proposal, all right, you can see that his is more towards helping those who are already pretty rich, right, pretty up there. So you can see Trump's tax reform will reduce the number of tax brackets, eliminate the carried interest tax loophole, and reduce the corporate tax rate to repeal the estate tax. All right, so basically this one is more, it actually benefits the rich more than the middle class. All right, and he also plans to abolish the carried interest tax, as it only has benefit Wall Street investors and people like him. All right, so in order to do that, he plans to reduce the corporate tax rate from 35% to 15%. All right, and that of course again helps the people who are running businesses as compared to Hillary's. All right, and he offered what was promised to unleash an energy revolution that will bring vast new wealth to our country. Okay, so basically Donald Trump's policy is one of the common ones. All right, so that's why whenever there is a certain chance that Donald Trump might be elected as a president, you do see the uncertainty and the fear coming into the financial market as well. All right, so this is just a quick introduction into their policies. All right, as a trader, as an investor in the financial market, you need to know at least a little bit on this, because whoever is going to win the president, who's going to be elected to be the president of the United States, all right, is definitely going to affect the financial market because of some of the policies that they're going to adopt. All right, so let me go through this. All right, now I'll bring Stephen in. Basically, I also quickly go through a review what are some of the impacts, all right, or how policies affect the economy. All right, and why we as traders or even investors need to take note of this. And of course, if you are a businessman, you need to be aware of this as well. All right, so the idea is how policy is going to affect economy is that investors and businesses, right, or even traders like us, what we want to favor is that we want to see how these policies can affect the economy, right? Basically, what we want is we want to have low taxes, right? Because taxes here is actually a cost for business, right? If you have low taxes, your profit margin for businesses we're gonna increase, all right? And with that, with profit margin increase, your revenue and profit increase, you tend to spend more, all right? Invest more as well, all right? So that is gonna spur economy. All right. The second thing that investors and businesses want is a stable economic and political environment. All right. This is basic econs 101. Basically, if the country's political scene is not stable, investment and foreign investment will not come into the country. All right. So this is something that investors and businesses would want, right? Stable economy and political environment. The third one is, of course, strong consumer demand, because this one favors business directly, right? If in the market, no demand is in, right, the whole economy doesn't flow, right? Business is not gonna succeed as well, right? And the last one, business and investors would want is actually a low level of financial uncertainty, right? This one, of course, ties in with a stable economy and political environment as well. Right, so this is basically what investors and business favor. Right, so the question here is between Trump and Hillary. All right, who can actually provide this for? All right, or if they can't provide all four, who can provide majority of it as compared to the other? All right, so as a rational businessman and investor, you actually select or vote for the president based on this. It's for criteria. All right, so what we do is we compare Clinton and Trump. All right, so this is again a very brief one. Clinton's tax plans are less favorable to the top 1%. All right, but just now I mentioned, right, she actually worked towards helping the middle income group, right, the middle class. Right, this plan might give a less boost in the short term than Trump. All right, this is talking about the economy, but actually a long-term perspective certainly looks better than Trump's policy itself. Right, and Clinton's plan seems to carry less uncertainty as compared to Trump's idea, right, whose policy seems to attract scrutiny from the business world. Right, so this idea here is we are comparing overall Clinton's policy against Trump's policy. Right, you can see that in short, right, Clinton's policy might not boost the economy too much in the short term, all right, but it's more towards the stable route, all right, and she actually provides a form of certainty to the market itself. As for Trump's, all right, Trump's tax cut will boost the economy in the short term, all right. Basically, when he cuts, businesses would tend to have higher profit, and that's going to spur economy in the short term. All right, but in the long run, it might run into a financial debt deficit, all right, creates higher debt versus GDP ratio, and that's definitely not going to be beneficial for the US as a whole. And this could increase the default risk and thus cause the currency, all right, to be a riskier currency, meaning US dollar might lose its safe haven status if, there's a high default risk in the country itself. All right, and of course, to compensate the increased risk, US need to offer higher interest rate for the investors to hold on to the dollar itself. All right, so this is something that you need to take note of. A quick one between Clinton's and Trump. Before we continue, I would like to now pass on the time, all right, to Stephen, because he did prepare some form of research into the elections itself and how it's going to impact the market. All right, then after that, we'll actually come back and I'll share with you what we have prepared as well. All right, so I'll pass it to you, Stephen. You might also want to talk about this topic, all right, about US debt and the US dollar, how the US debt is in fact a backbone of the US dollar itself. All right, so I'm going to pass the screen to Stephen, all right, and he's going to share with you his view.
Can everyone hear?
You might need to talk louder.
Okay. I put in the chat. Can everyone hear me? Kayong, you're also on air with me, right?
Yes, I can hear you now. It's clear. Yes, Stephen, it's clear now.
Okay, great. Thank you. Okay, so as what Kayong was mentioning before, the election is definitely going to be a very crucial element this year. I think by far this is going to be the biggest event for 2016. Okay, it's going to surpass Brexit. And before we get to the debt component, I just want to show you all something concerning Brexit. Because actually, if you look at the November 8th, we've kind of had a preview as to what might happen on November 8th. And that preview was June 24th, the Brexit poll. So this was the Brexit poll, okay, tracking the opinion and sentiment prior to the actual poll. And as you can see, Remain camp was in for a fairly decent victory, although it wasn't very clear. But all the news that we were seeing being reported in the media always hyped up that Remain would win. And everyone was writing off Brexit as a crazy proposition, and you never thought that the voters would actually be crazy enough to do something as to vote for Brexit. The consequences of Brexit we witnessed firsthand. Okay, the pound dropping to a 30-year low. Okay, the market completely collapsing on the news of the vote. Right, so we've had a preview of that sort of event happening. Okay, but the key element here is that all the polls were wrong. Okay, and that's something to take note of. The reason is we are seeing in the media and news that report polls and such saying that Hillary has been in a very stable lead for a very significant amount of time throughout this campaign. Okay, and they tend to write off Donald Trump, even though media has been playing up a lot of his rallies, and they show a lot of his controversial statements and such. They always say that Hillary is maintaining a comfortable lead, and there's nothing really much to worry about. Okay, so before we do that, I just want to go over the short part of the debt. I have something on the debt that Kayong mentioned. Now, debt is a key element here because, okay, as you can see, who owns America's debt? Okay, US owns most of that debt. Now, who occupies the White House is definitely going to influence the outcome of their fiscal policy and ergo their debt. Okay, and as Kayong mentioned, Trump's policies will risk incurring a lot more debt, and that would also affect their debt payments because his structure and his tax policies tend to favor the rich, but his tax reforms and his economic policies that he plans to implement are all going to rack up higher debt. Now, as you can see, China is one of the largest holders. China is the largest foreign holder of US debt. And the reason for that is if you follow China's manufacturing based economy, they buy up a lot of US debt because they want to increase the competitiveness of the Chinese currency, okay, versus the US dollar to maintain their competitive edge. So that is why China keeps on buying up a lot of US debt. Supply and demand where they want it to, okay, because that affects the forex market with regards to US dollar and China's renminbi. So that affects their competitive edge when it comes to manufacturing. Okay. Now, if you look at US debt and what is US debt is essentially based on their fiscal policy and what they choose to spend on. Okay. So if you look at a breakdown, what you will see here is, okay, they spend mostly on social security, pension funds, okay, retirement funds, Medicare, military, okay, and these are the things that they take care of. Okay. Now, most of that is held by the public, as you saw earlier, right? US themselves hold a lot of the debt. Foreigners hold a significant amount of that. The balance of that is held by foreign entities, and the largest of those is China. So as you can see, China is a very key player in this equation when it comes to the debt. So that affects politics as much as it's going to affect who's going to take over the White House. Back to the elections, okay, and why I'm talking about the polls being an inaccurate measure of how the election might just turn out. Okay, I don't know if you can see this. Let me zoom in on this, okay? And these are a news article from, sorry. Now, these are news articles that are posted online by a you can see the comments, okay, by an article about Hillary. Hillary loses her cool after Hitler calls her a rapist. Now, if you look at the comments, you can see that Hillary doesn't really have a lot of popularity herself. Okay, she's not actually gaining much in the social front. And this is important because, truthfully, I don't really trust what the media reports when it says Hillary is in the lead. Hillary is in the lead. Really, when it comes down to the vote, okay, it's going to be about people on the ground voting. And social media and tabloid newspapers are a very good indicator of that. So as you can see, comments such as this don't really look really promising for somebody like Hillary. Okay, and what I'm essentially driving at is that the outcome of the election, as Kayang said, we don't trade, is because the probability is really 50-50. The probability is not going to be 80-20 or 60-70 or even 90-10 based on what some polls like to talk about, because the fact is people on the ground are going to be the ones voting. Okay, and if you look at how much donations have gone in, Hillary has raised more money, 180 million compared to Trump, 33 million. Now, these are donors who are lobbying for their preferred candidate. And I want you to take a good look at where this money has come from. Okay, as you can see, Wall Street is one of the largest donors. The problem is Wall Street is not the 99% of America's population, right? And if you look at the rest of the donation, Silicon Valley, activism, Hollywood, okay, these come from the well-to-do industries, okay, and the wealthiest part of America, the 1%. Okay, and even though Hillary's tax policies tend to hurt the 1% more in what the tax will affect them in the outcome eventually, they know that Hillary is somebody they can count on to do exactly what is required of her when the time comes for action to be taken. Trump, on the other hand, is really cannot predict what he is going to do. As you've seen, he is very quick to shoot his mouth off. He is very radical, very crazy, and a lot of things he says. So, you know, a lot of people are saying that how can somebody like him be president? So he cannot be counted on to do what is required of him. He cannot be bought in that sense, and he is not somebody who's going to bend to pressure and lobbying money. Okay, so markets are very heavily pricing in a Clinton victory. Okay, they are pricing in a Clinton victory, and as you can see, they are throwing a lot of money at Hillary Clinton. And yet, just a simple poll can affect the markets. Okay, truthfully, it shouldn't, because markets should not be pricing in one or the other. A market should be, in my opinion, factoring in the fact that this is going to be a 50-50 chance of either of them winning. And in order to do that, that's not a very good trade. Okay, if your probability is 50-50. Okay, now all these WikiLeaks and FBI cases that are opening are obviously not helping Hillary Clinton's cause. Okay, but the fact is, it is going to affect the way people perceive her. And as you have seen from things like this, they already don't perceive her to be a very favorable candidate for the presidency. Now, these articles and these links are, I think, share with Kayang. He'll put it into the slide that he'll share with you. Okay, and this article, in short, basically says that not all Trump supporters are crazy and blind, stupid when it comes to voting for Trump. Okay, this article interviews a woman who has been burned by policies by the Democrats. Okay, now to this woman, she started a very successful business and it was doing really well, and through absolutely no fault of her own, she lost her business, she lost her workers, and her house was repossessed, her car was also repossessed. She lost all of those things that she worked so hard for, and none of those were from decisions that she made. And at the end of it, Wall Street bankers got the largest payout. Okay, taxpayers' money were used to bail out the economy, and all of that money went to Wall Street instead of the 99% that suffered the most. So if you look at one of the comments in this article that she made, she was not going to vote for Hillary Clinton, not because she really, really likes Donald Trump. Okay, she knows that Donald Trump is crazy, he's radical, he says a lot of stupid things. But she's not going to vote for Hillary Clinton because she just doesn't like Hillary Clinton. And the donation list, as you saw, strangely looks like a lot of the banks that foreclose on her house and repossess her car. Okay, a lot of the Wall Street donors that donate to Hillary Clinton are the big banks. Citigroup, Bank of America, okay, Merrill Lynch, all these banks are the ones that were benefited the most in 2008 from the bailout, and they're the ones that are donating to Hillary Clinton. So somebody like this woman, the 99%, she's not voting for Hillary because she just doesn't like Hillary. So the only alternative is Donald Trump. Okay, but what if you don't like to vote for either one and you're just not going to vote? That is an entirely reasonable prospect because voting in the US is not compulsory. Okay, and that is something to note because purely based on voter turnout, Trump could win the election. Okay, a lot of people, like you've seen, don't like Hillary Clinton, but then they're not gonna. It's not gonna sit well with their conscience if they're gonna say that I went out and I voted for Donald Trump. So based on that, they're just gonna think, you know what? None of these candidates are really cutting it for me. I'm just not gonna bother with this election. And voter turnout is something that media's not really reporting on, but can definitely play a part in influencing the election. Okay. And news articles like this essentially talk about how, if elected, Hillary is going to be following the playbook of what every president that did win the election, was the favorite candidate, is expected to do. Okay, there's a book 101. So in a sense, if you see the market start to crash, you can be expected she's going to consult the Fed. She's going to do exactly what is required of her, the way Barack Obama did in 2009 and 2008, when also markets were going down. Now, in that regard, okay, similar analysis I did before in detail for a firm, but I can't show you that, but I'll show you a simple analysis here. Okay, a simple analysis here, just a simple, even a simple Wikipedia analysis is enough to demonstrate to you that when markets have their favorite candidate, or at least the big boys have their favorite candidate, we can expect to see some interesting moves in the market the following year, or perhaps even in the year itself. Okay, so this is a side-by-side analysis, okay, of market crashes coinciding with presidential elections. Okay. Now, essentially, markets are, when you look at a price chart, it's the collective behavior of all the players in the market. This includes us, and of course, it includes the big boys in the market. Okay, the Wall Street players, as well as the largest players in the market, like Soros, Buffett. Okay, all of these have the largest influence in the market. Now, when they are very sure about who the president is going to be and they're confident, they won't hesitate to proceed with what they want to make markets move the way they want it to. But when they're not really sure about how the markets are going to react, okay, and or rather should I say they're not really sure about how the election's going to turn out, they tend to wait when they are more firm with who the president is going to be. That analysis, okay, if you look from 1907, okay, more than 110 years ago, the first panic happened in 1907. 1 year later, presidential election happened. Okay, but when action was only taken in 1908 when the president was elected. And if you go to 1929 Wall Street crash, you notice that 1 year before, they were already assured of who their favorite president was. Okay, and we don't have time to go into Herbert Hoover, but he was crucial, okay, in enacting a lot of policies that didn't really help in the Great Depression. Then if you go on to 1937, right, which was another recession, you look at 1 year prior, Franklin Roosevelt election, 1936. Okay, and we keep going and we keep going, and let's see what's the next most significant. Okay, around the 80s, we had the Gulf War and the mini crash. They align in 1989, 1987, we had the Black Monday. That's not so crucial. Okay, but 1989 to 1990, we had the Gulf War. So you see, we have George H.W. Bush, 88, 1990 recession. Okay, and bubble. Okay, Black Wednesday, Asian financial crisis, 1997. 1 year prior, we were elected with Bill Clinton was elected. Okay, then we come to .com, 2000, and as you can see, George W. Bush, president. Okay, then there's 2001, 2002. Now we come to 2007 subprime financial crisis. The real effect took place in 2008. Okay, 2007 is only here because that is hindsight and we know what happened. But the real effects were only brought to light in 2008, and as you can see, that's also the same time Barack Obama was elected. So you could say it's coincidence, but based on what we've seen, again, I analyzed this, and if you look at market behavior and you follow the market behavior and you back tested it, you find that a lot of the major players follow the elections very closely when they are assured that there's going to be a president in office that they can count on to do what is required when things go awry. So that's something for you to take note. You can take this and believe it, or you can take it with a pinch of salt as well. But I do believe that if Hillary is elected in this election, chances are we're going to see some very interesting
Okay, sorry guys, I think my team viewer just crashed. Give me a few minutes. I'm logging in again. Okay. Sorry guys, my team viewer actually crashed, so I'm actually reopening up this again.
the 101. You've seen this book before, just follow it through. Who occupies the White House after that, but significant events that take place after the White House in US election, which is not covered by the media. here right now, but very significant. Okay, and that is the
supposedly has damaged the GOP. So the Republicans may not be able to retain the Senate. Now, if the Republicans don't retain the Senate,
supposedly has damaged the GOP.
then
So
it's
for Republicans controlling the Senate makes it easy for bills to pass.
but only because our politics, Republicans are not here just for the sake of it. This is not a good way to run a country.
First up is the Italian impeachment.
Constitution is essentially what the same thing is going to be. And this is essentially a veiled view in support. So if Italy does vote to recall the Constitution, essentially what
And to bail out the immigrants. And this is essentially a veiled you exit port. So actually does what you on the constitution. Essentially what they're saying is rejecting each.
Hello. Hey Steven, my team will crash, so I think they might not be catching your audio because they are actually. Can you see the text there they're typing? Oh, you finished. Okay. That means you're done, is it? Oh, okay. Cause mine crashed, so I actually joined in and then I cannot see your screen at all. Okay. I think I might not have fully recorded your entire session, but never mind. Then I'll actually go ahead with the remaining part lah. But you're still inside, huh? Yes, but they can see my screen now, right? I suppose you can see my screen is in the PowerPoint, right? Oh, you can't see. So what do you see right now? Okay. I think because my team viewer crash. Okay, never mind. I'll settle it then. Since you're done, I'll work it out. Okay, thanks. Later I'll talk to you again. Okay, can bye. Hello guys. Can you all hear me right now? Okay. Okay, I think some connection issue just now with Steven's side. All right. That's why his part my team viewer crash. All right. So just now also his part I can't really look out into it. Right. But basically just recap what Steven shared was basically if you guys need, all right, I'll see if I can fetch that recording out to replay for you guys again. Okay, so all right, let me just do a quick check on all the sound. All right, this is good. Okay. Okay. Sorry about that. For those who are in the room, all right. I guess now it should be much clearer. And for those on those on Facebook live video, I'm not sure if you can hear it, but basically you should be able to hear it now. All right. Still as echo. Okay, the echo part. Let me just tilt my mic. All right. So hopefully it's good. In terms of Facebook side, hopefully you guys are getting better in terms of the audio as well. All right. So now it's good. Okay. That. Okay. Okay. Okay, Ken. I'll speak louder. All right. So some of you say it's pretty soft. Some of you are good. All right. So basically, what I do is I'll just speak louder. Hopefully, everyone will be able to hear that clear, clear and good. Okay. So let me go over to the slides to share with you what I've prepared as well. All right. Sorry that I also missed out a little bit on Steven's side. All right, so that part, let's see how we can get that up again. All right, but I want to share with you the role of the US dollar. All right, and why is it so important to take note of it? Okay, so if you look at this, right, basically why is it so important in terms of the US dollar is because this the dollar itself, all right, as you guys would have known, okay, it is actually the world currency, all right, is one of the safe haven as well. And the idea about this is that the credit worthiness of the US debt, right, is essentially the role of which the US economy in the world is based on. Okay, and why is this important is because of these four factors, all right, that helps make the US dollar one of the key currencies to look out for, all right, because investors see dollar as a safe haven in times of distress and crisis, right, and this is simply because the US is one of the major power in. And the second point is the dollar is known for its role as a reserve currency of the world, right, and that is still the case for right now, right, that's why it's important. All right, in terms of the value of the commodities, all right, if you look into gold, silver, and even oil, right, they are all pegged to the dollar as well. That means they are trading against the US dollar. That's why it's important. The fourth one is that a large chunk of the global trades, right, still occurs in the dollar itself. All right, and this one we are referring to, corporates trading. Even for example in Singapore, if you want to go overseas to run your business and etc., and you transact, you're still transacting in the dollar. All right, but a lot of times people forgot that the president might not have the direct control over a monetary policy because that is done by the central bank, right? It's done by the Fed in the US. But what the US president can influence and can control is the economic and fiscal policy. A direct impact on the dollar itself. Okay, but you need to take note that the US president and the Federal Reserve have very different control over the whole monetary and economic system. So next is I want to walk you through then what is going to impact the dollar fundamentally. Okay, this one for those who are aware, right? Basically, currencies or financial markets are moved not only because of fundamental reason, also from fundamental and sentiment. All right, basically what the market feels is going to affect the prices in the stock market and the FX market as well. All right, so fundamentally what is going to drive the dollar is these three things. Basically your interest rate, right, your inflation difference. All right, interest rate here we are referring to the central bank interest rate, right? So naturally if interest rate is high, all right, then the dollar value will appreciate, right, and vice versa. All right, inflation difference over here, we are referring to the inflationary pressure difference. Sorry, we have a question here. Any slides right now? Yes, there is a slide. All right, I'm actually sharing slide. What you can do is, for those who cannot see it, you might want to, hold on, let me just quickly check. Can you see my screen right now? For those in the room, can you see my screen? Okay. Okay, so some yes, some no. For those who can't see, what you need to do is try to re-log in again. All right, basically you should see the slide presenting right now. Okay, so I'm actually sorry for all the technical difficulties faced. All right, eventually we'll move on from TeamViewer to maybe a better platform itself. Okay, so over here, all right, we are talking about inflationary difference. Right, and how it's going to affect the dollar itself is we are talking about the inflationary pressure difference between US as compared to, let's say, Australia. Right, and for those who are aware, interest rate is actually higher, right, and that's why certain investors, all right, will actually buy into the Australian dollar. All right, basically what they can do is they actually get a higher premium from buying the dollar itself. They collect a higher interest as compared to the US, right, and that's going to affect what the Fed is going to do, all right, because they also want to control certain inflationary pressure in the economy itself, all right. And of course, the third one that's going to affect the dollar fundamentally, it's the trade balance itself, right? So depending on whether you have a trade deficit or you have a trade surplus, that's definitely going to affect the US dollar, all right. And of course, what we are talking about, this three aspect is all excluding the sentiment. Right, and if you are trading right now, most of the market is actually driven by sentiment because of the election. All right, and even if today you look at the UK side, right, there's a new piece of news event that took place. All right, and you can see pound strengthening a lot. All right, that's because of sentiment and not really on fundamental. I want to talk to you broadly in terms of some of the opportunities that you can capture post-election. Right, the first one over here is against the Chinese yuan, right? Basically the China renminbi. This is important because today, all right, in today's context, it's not just the US that is the major power in the economy, but China is also one of them, right? And you cannot ignore the China renminbi itself. Right, so if you look into this, depending on whether Hillary or Trump is going to win, actually there is not much of a difference because we believe that no matter Hillary or Trump is going to win this election, the relationship between US and China, and of course across the global world in terms of economy, is not gonna change much. All right, so what we believe over here is that US election most likely will not have an impact on China. You can see over here on a daily time frame, all right, basically starting from 2015 all the way to today. To date is about close to 2 years. You can see the dollar has been appreciating against the China renminbi. All right, so what we expect over here is that whether Hillary or Trump is going to win, long-term wise, when we mean long-term, we are looking at 6 months to a year. All right, we do believe that this currency pair, basically the dollar against the yuan renminbi, is continuing its uptrend unless certain things happen drastically in the market itself. All right, so if you're looking into opportunities on trading the dollar against the Chinese yuan, we are still, our perspective and our bias is still bullish on this. All right, another one that I want to share with you is dollar against the Mexican peso, right? This is interesting because if you followed the elections and you followed most of the speeches that Trump gave, right? You will realize that Trump criticizing the Mexican for causing a trade deficit in the US. All right, and this is important because that statement itself is going to impact the Mexican peso. And you can see that every time there's this dip, right? If you go and look out into it, every time there's a dip in Mexican peso over here, it's actually related to Trump giving a speech. right? And whenever there's a poll that shows that Trump is leading this election, Mexican is again dipping. All right, basically, what you see is Trump presidency would actually impact and it becomes a bad news for the Mexican dollar itself, right? So if you're trading this, if you're looking at this, right, you would have opportunity definitely. If let's say Trump wins the election, right, we can expect the Mexican dollar, Mexican peso to be weakened further. All right, and that's gonna send this currency pair further upwards, right? But if let's say Hillary wins and Trump didn't, what we can expect is Mexican peso is definitely gonna see some strength, all right, and high chance it's gonna do a dip retracement down, perhaps towards that 200 moving average over here. All right, so this is not a very common currency pairs. Not a lot of brokers offer that, but it's definitely one of the major opportunity that you can take note of if you have this on your portfolio. All right, another one is, of course, the dollar index. All right, looking at it directly, what's going to impact the dollar itself. Okay, so currently, if you look at the long-term perspective of what the dollar is doing, it has been in a range environment. This is back since 2015, around April period, right, to today, around November 2016. It's been in a range environment, right? So what we then look into is that if Trump wins, how is it going to impact the dollar? Okay, the dollar might weaken, right? And this is the reason is because of certain uncertainty in the financial market, right? Because of just now Stephen, I think, shared a little bit at the front part as well how drastic and radical Trump is, right? And some of his policy is, and that's definitely gonna weaken the dollar because of financial uncertainty in the market as well, right? And possibly undergo a period of volatility. This is the second scenario. Possible that the dollar might just experience a certain kind of volatility in the market, all right, and not moving anywhere in the short term, because they're actually still digesting what Trump's next decision is going to be, all right? And the third scenario is according to his tax rate policy, right? The dollar could strengthen as an initial reaction, all right? Because what is going to happen for his tax cut policy is that it's going to benefit companies in a very short term, all right? And what it's going to do is the dollar is going to start appreciating. Right, but this you need to take note is because it might be just an initial short-term reaction. Okay, in the long run, if the debt continue to rises, right, the dollar might weaken because investors starts to pull out their investment from US, right, and that would send the dollar down. All right, so this is some of the potential scenario on the dollar index directly. Right, so the other case is if Hillary wins, right, that's going to be a very simple scenario planning. All right, because most of the people are already expecting Hillary to actually win this presidential election. Then definitely there will be less uncertainty in the market. All right, and because of that, we might see a short-term strengthening of the dollar as well. Right, so if you realize no matter Donald Trump is going to win or Hillary is going to win, short-term wise, we might still see the dollar winning. All right, strengthening. And over a long term of period of time, we are looking into maybe end of this year and 2017 itself. Because if Hillary wins, there are less uncertainty. All right, there are higher chance that the Fed is going to increase the interest rate. All right, and basically for those who are following the Fed, you know that they are actually dragging this. Right, simply waiting out for the election to take place before they decide whether they want to increase the interest rate. Right, so if Hillary wins, high chance that the Fed might increase interest rate in December, all right, and probably early next year. All right, and because of that, the dollar might continue to see strength. All right, some other potential currency pairs that you can take note of is, of course, the dollar against the Russian ruble. Okay, this is interesting because if you read into it, you will realize that Russian president, all right, basically is actually friends with Trump. And if you read into the recent social media, the recent news, you will also hear or see article or headlines stating that if Hillary wins, all right, basically they'll go into World War III, right? So that's the part where it's actually threatening, showing some sign that the Russians do not favor Hillary winning. Right, so over here the potential is this is dollar against the Russian ruble. So the potential over here is that ruble will potentially strengthen if Trump wins, all right, and weaken if Clinton's win. All right, and we are talking about long-term period, all right, of course looking into 3 months, 6 months, and 1 year period. All right, so over here, if Trump wins, all right, we can see this currency pair dipping further, all right, perhaps towards the next support level around the 52.50. All right, and of course, if Clinton's win, we can see the price of this currency pair rallying perhaps towards the next resistance around the 72 area. All right, so you can actually take note of this opportunity in this currency pair as well. Again, it's not one of the common currency pairs, so you might need to check if your brokers does offer you this. And of course, looking into the stock market, all right, S&P being one of the most common one, you can see recently it has dipped. All right, so what we are waiting for over here is to wait for the end of the elections to see how or who is going to win. Right, basically, we believe that if Hillary gonna win the election, high chance is that S&P is gonna see some support and it probably gonna rally from here. Right, but of course, if Trump wins, this is definitely gonna drop simply because of two things. All right, this is what we believe. The first one is the uncertainty that's being caused in the financial market. All right, stock markets we're gonna drop if there's much uncertainty in the market. The second thing is if Trump wins, all right, he basically criticized a lot of the foreigners in terms of not only just the Mexican, all right, but also in terms of the Muslim side. All right, so definitely we're gonna see some funds, especially from yeah, we're definitely going to see some funds, all right, pulling out from the US investment, US stock market, and that's definitely going to cause the S&P to drop further. Okay, so if you're looking at this chart, all right, daily time frame, what we expect is that if Donald Trump wins, the next potential level is definitely at least minimum 2,000 or even more, all right, depending on what is going to be his decision or what he decides to say after he wins the election. Okay, but 2,000 is a level to look up for if Donald Trump is going to win that election. All right, potentially some of them are stating that it might even drop to 1.8. All right, the most recent low over here. All right, but if Hillary is going to win this election, high chance is S&P is going to be supported over here at this 200 MA. High chance they're going to rebound back towards perhaps 2160 or 220 or even achieving a new high. All right, but again, this one you need to take note because this is on a higher time frame, daily time frame. We are sharing with you perspective on a longer term period, meaning 3 months to 6 months. All right, so if you are on a trading on a smaller time frame, you need to take note of whether your portfolio can take that kind of volatility in the market. All right, I'll go through some of the major ones, and then later on I will open up the room for Q&A, and we can talk about more in depth into perhaps some specific potential setups that we can look up for in this week and next week, right? Just before the election. Okay, gold is actually the last one I want to share with you, if I'm not wrong. Yes, gold is the last one I want to share with you, and gold is very interesting. All right, because of two things. All right, historically, price action hints that gold price will rise after a Democrat wins the election. Okay, so based on historical election statistics, all right, whenever a Democrat wins, gold prices is gonna rally. All right, and alternatively, if Trump wins, there will be uncertainty in the market. This will cause safe haven like your gold, all right, to actually rise as well. All right, so the idea here, if you read into this too, the scenario here is that no matter Hillary is going to win or Donald Trump is going to win, we can expect gold prices to rally from where it is right now around 1.3. All right, this is pretty interesting. All right, so I'm not sure whether this is going to play out. Again, this is just a perspective. This is what we research and what we find out. It's not going to be a guaranteed kind of scenario, or not it's going to be a guaranteed kind of trade, right? So what you need to do is, if you are okay in taking that kind of risk, what we can share is you potentially can start investing into gold, right? But of course, this one is not a trade call, it's not a signal. It's just something that we would like to share with you that you might take the opportunity if it fits your risk profile. All right, so if you look at this, recently gold has been supported over here at the 200 moving averages. All right, and it dropped and then it started to bounce higher. All right, if post-election gold is going to rally, the next resistance you can watch out for is at least at 1340 or even higher at 1380. Right, so not too bad in terms of opportunity to take over here. All right, so that's basically the few things that we like to share with you and the scenarios that opportunities that you can take in the market for this coming election on the 8th of November. All right, so right now what we can do is I'll open up the room, all right, for questions and see you guys see if you guys have any questions or any particular pairs that you would like us to walk you through. All right, I can share with you my perspective on a shorter period of time. Right, meaning looking at the remaining of this week as well as the start of next week, what we can trade and what's the potential. Right, so drop your questions, all right, or if you have any pairs that you would like us to share insights on, drop it onto the chat group itself. You guys have any questions? Okay, crude oil. Okay, let me bring up the chart. Okay, in terms of crude oil, that I didn't manage to catch some of the research for this, right? But basically, oil is more. The two things that you need to take note about oil is one, it's pegged against the dollar. All right, and the other thing is you need to follow the news closely in relation to OPEC itself. All right, whether they're gonna freeze the output of oil or how is it going to occur. All right, so let me clear my charts and then I'll just share with you technical perspective wise how the oil market is gonna potentially play out. All right, so if let's say, okay, I'm not going to talk about how dollar is going to strengthen or weaken because we covered that earlier, right? But depending on whether dollar weaken or strengthen, it's definitely going to move this particular commodities, all right, because it's against the US dollar. All right, but if I look into the technical wise, all right, on the daily time frame, it's definitely still in an uptrend. All right, we can still see price moving higher low, all right, forming higher low, and currently is actually just hitting the previous resistance, all right. But it previously is an upswing, all right. Currently is in a consolidation, all right. So what we are expecting is that crude oil, it has the potential to actually bounce higher from here. Right, but this is purely based on technical analysis. All right, this one you need to take note on whether there's any fundamental change in terms of the output of oil, as well as whether US dollar side, how it's going to affect this. All right, so if you want to take into a shorter term trade opportunity, let's go down to H4 time frame to spot for any. Let me do a quick check. Okay, based on the strategies that we are using, all right, currently on H4, we are looking at very strong downward movement, all right. So right now we are not looking for any opportunity to long unless it dropped below further, all right, towards this key support level around here at 44. All right. Other than that, we are not looking to actually buy gold. Buy oil, but we are just looking for any opportunities to short it. All right. Based on H4, is in a very strong downwards momentum. Right, so right now, if you go into even smaller time frame on H1, on the hourly chart to check it out, you might see some opportunity to trade it. Right, so if I show you some of the key levels that you can potentially watch out for, over here, let me pull in my tool. All right, this is the region to look out for if you want to short oil. All right, again, this is based on technical only. So if you are looking on to combine technical, fundamental, and sentiment. Always pay attention to the news regarding OPEC and such. All right, but if you are basing on technical short-term wise, we do expect price to come back up here to look for an opportunity to short it. All right, but what you can expect also for breakout traders, all right, to wait out for this level, for price to break the previous low, and when it goes lower, you can enter on a breakout trade. Okay, as of now, we don't actively trade this particular counter, all right, or particular commodities, but we do simply monitor crude oil because of Canadian dollar, right? We trade the US Canadian, so that's why we look into the oil market, but we don't actively trade this itself. Okay, so how you can take note of this disparity is that you can see that recent move on oil has been dropping, all right, but Canadian hasn't been weakening a lot. Right, so there is actually some form of divergence forming between the correlation of oil and Canadian. All right, and the idea about correlation is that over a period of time, sooner or later, all right, this correlation is gonna come back. All right, it's like a mean reversion thing. Right, so sooner or later, either gold prices is gonna come back up, rallying, or your Canadian dollar is gonna weaken because of oil prices itself. Right, so this is something that you can take note of. So in terms of this, just two levels to take note of. Upper resistance right now is at 46.60. Right, the current immediate support is at 45. All right, so depending on what's your trade plan, you can trade the retracement towards the downside, or you can trade the breakout. Okay, as of now, nothing is showing on the technical setup that it is bullish. All right, so just look for sell opportunity in the short term. All right, we have another question. How is December interest rate hike coming in if Trump's win? Both will give mixed sentiment to the dollar. All right. To answer this question, all right. My personal view is that if Donald Trump is gonna win the election, high chance that there is not gonna be an interest rate hike. Right? Simply because I feel that with Trump winning, right, he is gonna cause a lot of uncertainty in the financial market, and as such, the dollar itself is going to weaken, all right? So even if, let's say, Fed decides to hike rate, it's not going to impact the dollar much. Basically, it's not going to give the support towards the dollar value appreciating, okay? So very simple is that my view is that if Donald Trump is going to win, over a period of time, the US dollar is going to weaken, all right? And even if the Fed decide to increase or raise interest rate, then it's not going to affect the dollar much anyway, all right, because the market is going to take in sentiment and use it as a catalyst to drive the currency. Right, so if Trump wins, my bias towards dollar is going to be down. All right, so next question, is silver similar to gold? Yes, these two commodities, all right, silver and gold, they move very closely. All right, so let me just pull you up the chart for silver. Right, on the daily time frame. All right, so what you're seeing here on the daily time frame is silver is very similar to gold. All right, it's definitely currently in an uptrend. All right, right now it is consolidating. You can see this 200 simple moving averages is supporting it. All right, so again, the play on silver is going to be very similar to gold market. Okay, and the research that we have done over here based on historical election is that no matter who's going to win, your precious metals like gold and silver is going to rally post-election. Right, and of course, if your US dollar is going to weaken, this particular commodities, this pair itself is definitely going to move higher as well. Okay, how high it can go, I will not know, right? But the immediate resistance it has to break for silver is about 20.45. Okay, so once price break above this 20.45, this particular commodities can basically fly very high. Higher time frame on the weekly time frame to see where is the next resistance. All right, so if it breaks that 20.45 level, the next level potentially can reach is actually 24. All right, and of course, if it breaks 24, it can even go up to 26.85 level. Okay, in terms of precious metal, at this current moment, I would feel that it's one of the safer trade that you can actually start taking. Okay, when I mean precious metal, I'm referring to gold and silver, right? Because from my personal bias is that no matter who wins, all right, it's definitely going to cause certain fluctuation and volatility in the market, all right, and that's the reason why some of the money is going to flow into precious metal, your safe haven. That's why you can actually see that gold and even Japanese yen will be more of the higher probability trade to actually start buying into. All right, let's take a look at dollar yen. All right, so you can see with that kind of sentiment pushing, all right, this is again on a weekly time frame. Let me just go down to lower daily. All right, you can also see that just recently, this is on daily time frame, all right, because of certain news, all right, that happened in that release, all right, this was caused by last Friday, because of FBI opening up the case again on Hillary. You can see yen strengthen, dollar weakens, right? And that drop is actually close to 200 points before today it starts to do some form of retracement. Right. So again, if you look into the near-term perspective, what are some of the potentials that you can take? Look into precious metal like gold and silver, as well as your safe haven like your Japanese yen. All right, we have one question asking, if Trump wins, likely action from BOJ to impose policy on it. Actually, no. Okay, I would say by right, they shouldn't affect. But the thing is, if dollar yen is gonna drop further, okay, BOJ definitely doesn't want it to drop, right? Because if dollar yen drops lower, right, it's gonna hurt the Japan export, right? Because in relation to dollar, Japanese yen becomes very strong, right? So what the BOJ probably gonna do is that they're gonna support the dollar yen from falling, right? But how much they're gonna support, we never know, right? But if you look at historical price support over here, okay, this 100 psychological level is very, very strong. Okay, it tested 1, 2, 3, 4. Right, even event like Brexit didn't manage to break this. Right, so what we expect is that if price comes back down towards the 100 psychological level, there's a high chance that it's gonna hold. Okay, but nothing is gonna be guaranteed. So if this 100 psychological level breaks, all right, it's gonna be free fall for the dollar yen. All right, if you're gonna break the next support level, you can look out for is around 85, 84 already. All right, we have a minor one here at 94. All right, and further below it'll be 84. Okay, so if dollar yen breaks 100 psychological level, you can really expect it to really experience a free fall over there. All right, so if you are talking about near-term perspective right now, if you look at the shorter time frame price action, it's again very bearish. Do not look to sell. Do not look to buy dollar yen as of now. All right. The next area that you can look for opportunity to sell is actually over here. All right. And of course, if you are following the technical strategies that we use a lot on Fibonacci retracement, okay. You can also trade off the 38.2 retracement. Usually Fibonacci is that if there's a strong movement like this on the downside, the retracement should be short-lived, and then the trend is going to continue. Right. So the first initial area to look out for a short opportunity based on this simple Fibonacci level will be at 103.69, 103.7. Okay, but if you are more conservative, you can wait for it to go higher. All right, any other questions that you guys have? All good? Okay, so if you have no question, I'll just comment on the last few pointers, all right, for those who are trading. The best part to do for the remaining of this week and next week is not to actively trade the market, all right, because of elections and such. Volatility is the sure thing. I can guarantee you that. All right, so I can't guarantee you, you know, where currency is gonna move, but I can tell you that volatility is definitely gonna kick into the market when election starts. So do not trade if you can do that. All right. So the best thing is, of course, to stay out. Similar to Brexit, the best thing is to stay out. All right. And if you are trading with some of the brokers, you will realize that brokers has already sent you a notification and reminder that margins is gonna be increased. Okay. And that's all because of the Swiss franc crisis, all right, and brokers are now protecting themselves as well. So as a trader, what you can do is just sit at the sidelines and watch, all right, learn from how this event is going to turn out and do not always force a trade in. Right, we have another question. How come negative US data didn't affect the dollar much just now? All right, to answer that question, right now, what is going to drive this pair on dollar yen is more on sentiment, not so much on the data already, right? Because we are very close. We are very close to the US election right now. What is going to drive the market, especially on and off currency like Japanese yen and the dollar, is definitely going to be riding because of sentiment and not so much on the fundamental data anymore. Right. So if you look into this one, right, basically today's data is pretty negative, all right, but basically this currency pair right now is not going to be driven by fundamental data, all right, and this current situation is driven by sentiment, all right. So the only thing you need to take note of is tomorrow we do have still important data to take note of, basically your average hourly earnings and NFP. Right, but I do not expect this. If you want to trade this, right, trade it on a very short-term basis. Meaning, if best, you know, if you trade tomorrow, exit your position by tomorrow as well. Okay, so that is some of the advice that I can share with you guys. Any other questions? All good? Okay, if there's no more questions, all right, we'll actually end this webinar over here. Hopefully, you know, we shared some insights into how certain scenarios can play out. All right, basically, I'll send you guys the slide as well, the link to actually download the slide so that you can recap some of the things that we shared. And for Steven's side, I'll see if he can drop us the links that he shared in his portion just now, all right, so that you can also go through the materials that he mentioned. All right, really sorry about the hiccup earlier on, all right, because of I think my com is slowing down a lot already, running too many softwares. That's why, you know, my TeamViewer crashed just now, and then the hiccup just started happening where you guys don't hear or see anything. All right, so other than that, take note of tomorrow event and next week election. All right, I'll see you guys over the weekend for those who are actually meeting up. Okay, see you guys.